Welcome back, and joining us on the show now is Peter McGuire. He's CEO, Exim Australia. Peter, hi, welcome to the show. It is all about gold, isn't it? Because we're inching back towards $2,200 per ounce, and this is ahead of the US inflation data that comes in tomorrow. It also is a long weekend, not just in India, but most part of the world. How are you looking at the gold support coming in right now?
Well, I tell you what, Manisha, and greetings from Sydney and happy Easter to everyone. 22.17. I think there's every chance you could see it move up a little bit from here. You've got the FX markets open tomorrow, and it's the end of week, end of month, and end of quarter. Don't be surprised to see volatility through thin trading. So there's the first side, and I think gold, I wouldn't be surprised to see it push up from here. Certainly in April, I think we'll take out records. So that's where it's looking.
All right. Peter, what is the kind of participation that you're seeing in the markets right now? Is there a short squeeze that the market likes to believe that it is? Or do you see, apart from central banks, hedge funds and ETFs also now getting into this bull run?
I think everyone's getting in. I mean, central banks certainly, hedge funds are jumping all over it, retail traders, certainly the man and woman on the street as far as buying physical. And it just seems to be, we're hearing what's happening as far as Raphael Bostic from the FOMC. You've got probably one cut. You've got Wallace saying it's going to be pushed out. 9 of the 19 are saying you're going to see 2 cuts or less this year by the Fed, Manisha. So inflation, I think, is still very sticky, very, very sticky. And that's one of the great attractions for gold.
Peter, what's your own sense on where the prices are headed now? Because, most of the forecasts on the street now are talking about 2,300, 2,400. I've seen reports of 2,700 on the higher side as well. And all of that within this year in 2024. Wow. What is your own forecast for this one?
I told you, and I'll say it now publicly, I said I wouldn't be surprised to take a 25 handle out sometime this year. And I probably revised that down to maybe a 24, but I think it's got the capacity, Manisha. It's so hard to really put a forecast as a number, but there's just so much momentum to the upside that I think that gold's really going to shoot high in the next 3 quarters. So you've got big elections coming up in your own country and, of course, the states. So I think there's going to be a lot of turmoil. You've got geopolitical pressures. It's nearly a perfect storm, Manisha, for gold to trend higher.
And Peter, what about the physical buying then? Because in the Indian markets, we do know that for the month of March, the imports have seen a decline almost by a 70 or 80%. Physical buying also seems to be going lower now because of these all-time high prices and very volatile prices. It's not a festival or a wedding season here. So physical demand in the Asian markets for the month of March at least could take a hit. Going forward, of course, as the wedding and the festival season comes in, people will buy even if in smaller quantities. How are you looking at physical buying outside Asia? Because India will see buying, yes, next quarter. China is buying in huge numbers, central bank and retail-wise.
Absolutely. I mean, globally, Manisha, there's a very strong attraction. If you strip Asia out, of course, and the likes of India and China, I still feel as though that will resume. It's probably just a bit of choppiness. There's also, you've had raging stock markets, and you've only got to see some form of correction there, and that'll even force more money into gold. So, there's only so much money that people have got, but I think that there's been such a big push-up, of course, also with crypto, that's really attracting consumers, and I think there's going to be strong underlying buying moving forward in certainly second quarter and third quarter with festivals and just overall demand.
Peter, how would you look at silver then? Because that clearly has been a laggard. I mean, until now in this quarter, we've seen that outperform gold in some sense. But the kind of levels that people have been talking about silver, about 26 and 28 and 30 by the end of this year, what are your own charts telling you?
I think it's got more upside than gold, Manisha, and the reason why is because of the industrial demand, the undercapitalized essence of silver has been there's been no money thrown at it from a mining perspective for quite a while. I'm talking years, and I think the overall demand is going to be very, very strong for the silver market. So that's where I think that there's some incredible upside, and $30 seems very, very achievable, certainly this year, because there's just big, big demand, and I don't think that's going to wane at all.
All right, very, very bullish statements coming in for the precious metals, gold and silver. Gold, of course, could hit more higher highs, and silver as well. Nearly $4 and $5 from here on would be a good feed, strong feed actually, for the Indian markets as well there. Thank you as always, Peter, for joining us and throwing light on what really can be done in case of precious metals. With that, it's a wrap on Halftime Report. But Business Lunch will take all the action ahead.